Like what you saw from JP Morgan and what you got from Wells Fargo and Citi?
Yes, I think what we have to look at is so far the numbers are coming in line to slightly better than expected. As you've already highlighted, one of the standout areas has been credit. The credit quality for the banking industry remains very strong, and that showed up in everybody's numbers today. I'd also point out the other area that held in was the net interest margin. Most banks reported in line to slightly better margins, so the interest rate environment right now is working favorably for the banks.
The markets division and the investment banking story is really quite mixed and complex, Gerard. I'd love your read on it. It looks like equities is doing okay, both in trading and underwriting, and debt not so much. Is that going to be an industry theme, an industry-wide theme?
It's interesting because the two big banks that reported today reported opposite results in equity trading. When you look at the year-over-year growth, JP Morgan had very strong growth. On the other hand, Citi did not. They both had down trading, though, in FICC. So I think that's going to be consistent this quarter across the investment banks. And then on the ECM and DCM, that was also mixed. But ECM, generally, the equity capital markets should be stronger because of the strength of the IPO market and secondary market in the third quarter of this year.
Gerard, net income is flying, but there's still some people out there that say this is as good as it gets. Charles Peabody, a peer of yours at Portales, has downgraded JP Morgan this week and says the following: the company is at peak profitability for this cycle. I believe JPM stock is overvalued. There's at least 10% downside risk in the short term, and it could get a whole lot worse from there. What's your view on where this is going? And if this is peak profitability for this cycle, what it means for the stock prices of these banks?
It's really a matter of timing. The question is, will this peak profitability remain this way for another 6 to 8 quarters, or is it just now we're here at peak and it's going to start to come down? And I don't think it's going to come down over the near term. So if the U.S. economy continues to grow in 19 at 3% real GDP or better, the banks will be able to maintain this peak profitability well into 2020. So I think it's a little too early to get off the bank trade.